Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. Wow, I got to tell you, for such a slow day, right? We had a lot of great patterns setting up here on the S&P futures. The Nasdaq futures right now are down 89, S&P futures down 25. Phenomenal, great patterns. And I left up the spiders chart because obviously this is where it all began today, right? We got some big sell reversals on the 15-minute time frame, and I'm going to just show you these great patterns. Gold right now is trying to get a buy reversal. So gold just got a buy reversal on the 15-minute time frame. The GLD's reversed to buy. So what does that mean for me? The lows are in for the day, and I'll show you that in a second. But overall, what we're looking at here, okay, is the ability to take, as I've always told you, to look at the underlying ETFs, right, when you're trading the continuous contract. So what I did was I brought up the chart here on the spiders, and you can see here this morning we gapped down right here, and look at this beautiful 5-minute bear flag. So this is the first bounce on the 5-minute time frame after the 15-minute time frame reversed to sell. So when you have something like that, okay, and you then take the short, all right, you wait patiently. The 15-minute time frame reverse to sell at 9:45. You then take the short, and that short right there was a phenomenal pattern on the 5-minute. You wait patiently. You can see it got overbought. The ADX is rising here. You got the selling pressure, and if you click on here, you can see the high right here, 604.80, and it dropped all the way down right here to the 602. It dropped almost 18, 19 points on the S&P. That is a phenomenal long pattern, a short pattern. And what we're able to recognize when you see that, okay, everything that I do, if it's a 3-minute, a 5-minute, a 15, all my trades last within 8 bars. So if it's a 5-minute, it's 1 minute to 1 minute to 40 minutes. So let's just count the short. 1, 2, 3, 4, 5, 6, 7, 8 bars right near the lows. So again, a great pattern there. But what we want to be able to show, okay, on this pattern is the ability to understand that when you're trading the markets, you want to be able to have the right technology in your court and to be able to trade the market effectively. So there was a great short. Now, when the 15-minute time frame reversed to buy right here, okay, when the 15-minute time frame reversed to buy right here, okay, we then got the notion is that the lows are in for the day, right? Okay, so now the lows are in for the day. So when the 15-minute time frame reversed the buy, but look at this great pattern here. The 15-minute time frame got overbought into the negative MACD, and that is exactly what I'm explaining. That when you got that pattern, okay, that pattern was an absolute Picasso. So you had the overbought condition on the 15 into the negative MACD. Okay, you can see here that if I switch this over to the 30-minute time frame, that overbought condition, look at that, beautiful. The 30-minute time frame reversed to sell. So the overbought condition on both the 15 and the 30-minute time frame right into that 10-bar weighted moving average. Of course, the S&Ps have dropped more than 10 handles on the S&P here. So that was a great short pattern. Again, when you're using multiple time frames, you're able to then realize that when you're trading the markets, you want to be able to be in a situation, okay, that gives you the ability to trade the market effectively and to be able to then be on the right side of the market, right? So you're looking at multiple time frames, and when you look at multiple time frames, the 30 and the 60-minute time frames reverse to buy, the 15 to sell, the 15 reverse to buy. You take the first bounce on the 15-minute time frame, beautiful short, okay, And you can see here on the spiders right here, this bounce right here set up the short. Now, when you got the pullback on the when you got the 15 with the buy reversal, okay, you then can do the following. You then wait, okay, for the first pullback on the 5-minute time frame right here, and you take that long on the 15. So let's say they ran right there. They ran approximately 8 or 9 points on the S&P futures. So I'm looking at that pattern at 11:30. S&Ps went from like 29 up to 37. So 8 points on the S&P. A phenomenal pattern. Now, one of the things that's really important to understand, okay, is that when you're trading the market, okay, you want to be able to be patient, wait for the patterns to set up, right? And if obviously, because of we're in the holiday season here and things are kind of slow, you want to be able to be very, very precise in your trading, okay? You want to be able to recognize that, just be patient. And using the software that I created helps not only just in slow markets, but obviously fast markets, but gives you the ability to understand how these patterns repeat themselves each and every day by using the software, by using the technology, to the point that when you're trading the markets, what you want to be able to do, you want to be able to pinpoint the exact trades. So everything I do is based upon divergence patterns, a buy and a sell divergence. You got 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. And when you have these different, various different types of divergences, what you then wait for, okay, is of the 5 conditions, each of the 5 conditions has a strategy, a buy and a sell divergence. I want to just show you here, for example, all right, gold just ran $3, okay? Now, if you're trading gold, right, you can see, and I'll just type this in really quickly, on the 5 and the 15, you can see here the GLDs reverse to buy on the 15-minute time frame. The lows are in for the day. Okay, the lows are in for the day. So what does that mean for me now? That means that, okay, the 15-minute time frame reversed. Okay, the 30 and the 60 are still in sell mode. We have what's called a buy reversal. So when you got the buy reversal on the 15-minute time frame, what do we look to do? You buy the first pullback on the 5-minute time frame on the gold futures. Gold futures just ran close to $4 just now. 60, I think it got down to like 60.30. Now it's up about $3.5. These patterns, I've spent nearly 10 years of my life building this software. And I will tell you honestly, if you wait patiently for these patterns to set up, and you swim with the tide versus going against the tide, you wait, okay? You wait patiently. Everything I've built is predicated on a buy and a sell divergence. If anybody has any questions, please feel free to talk to me here about it, okay? Or ask any questions along the way. But again, it's all predicated on you really just understanding the market in a way that will give you the best ways to constantly keep hitting singles, and singles, right? Singles and doubles. That's all I'm about. Singles and doubles, right? Singles and doubles. And when you have singles and doubles and you have that ability, you want to be able, okay, to be that will help you be consistent. When you're consistent every single day and you can take money out of the market, it is such a great feeling. I can't even tell you. It's such a great feeling to have that, okay? That you want at the end of each day, the ability for you to be in such a positive way that it's going to really resonate with your trading. It's going to make you feel good. It's going to make you feel alive. It's going to make you feel like, wow, I did it. I can do this. This is great. And, in the end, what you want is the ability to be in the right position to enhance your trading. All right. And that to me is really super important, right? You want to be able to identify the pattern. So very simple. I could see that the MACDs are positive from below the pivot right here. My pivot line is the white line. The algorithm reversed to buy. I then take the first pullback on the 5-minute time frame, even though the 30 and the 60-minute time frames are in sell mode. This is what's called a buy reversal. If the 30-minute time frame reverses to buy, it's still a buy reversal. Remember, 2 out of 3. If the third one reverses to buy, the 60-minute, now you have a correlation and a trend. Okay, they all correlated, all 3 time frames, and they are now establishing a trend, an uptrend. Okay, the gold making new highs on the day. Okay, beautiful, beautiful, beautiful pattern there in gold. Now, one of the things that's really important, okay, is again, everything I do, whether it's intraday trading or intermediate and long term, is all predicated on using multiple time frames. I've been telling you this for how long now, since we've been here doing this together. It is really super important to understand the importance of using multiple time frame. Okay, if you can identify the multiple time frames and give yourself the ability, okay, to recognize that when you're trading the markets, all right, that you want to be able to have everything going for you. And when you have everything going for you, it's really predicated on, understanding the market conditions, the market direction, and everything that you need to know and everything that you need to fully understand as far as trading. Because when you have the multiple time frames and you're setting up properly, guess what? Everything aligns. So like I said, it's all everything I do is based upon visualization and repetition, right? And when you have visualization and repetition, the next thing you want to be able to do is understand, okay, if this happens, like yesterday, for example, we had a situation, I believe it was the S&Ps, gold making new highs here. Let me just show you oil really quickly, right? I'm going to show you oil. Oil just ran like 11 cents just now, right? I'm going to show you the USOs, all right? I'm going to show you the USOs because it's similar to what happened here. So here's the USOs right here, okay? They reversed to buy on the 15-minute time frame. Now, a lot of people don't trade the USOs, and I get it. They're like a turtle. They don't move. They just ran just now from 88 to 03, so they ran 15 cents. But here's the kicker, right? When you're using the USOs or the GLDs or the spiders, the Qs, the SQs, the STSs, the DIA, the SDOWs, the IWMs, the TZAs, whatever, the TLTs during the US hours, my research has shown me that you need to have the underlying ETFs when you're trading when you're trading the continuous contracts. You want to be able to have the continuous contracts using the underlying ETFs. So when USOs reverse to buy right there, as I have the horizontal line there, guess what? The 15-minute time frame, just like the GLDs, reversed to buy. I knew that the 15-minute time frame, by reversing, the lows in oil were it, the low below the 68.80 on oil. And then what do you look to do then? Well, then you look to buy the first pullback on the 15, because why? Again, the 30 and the 60-minute time frames are still negative on indicator 4 on my algorithm on the 30 and 60, identical to gold, as I just showed you. So if you're trading oil, look at this gold. This gold just ran $5 here, right? Now, if you look here on gold, you can see this pullback right here on the 5-minute time frame, right? You can see the MACD is positive. There's no big selling pressure. The algorithm reversed to buy. And look at the gold right here. That pullback on the GLDs just ran 30 cents. Gold just ran $5. This is a great, great, great pattern. And these patterns repeat themselves each and every day. And what's important to understand when you're trading the markets, right, to realize that this is a pattern, not the greatest pattern in the world. It's a pattern, right? It ran it ran, what did gold run? It ran about $3.5, $4 just now. Okay. But with that being said, now knowing that the MACDs are positive, there's no big selling pressure on indicator 2. Now, if the 30-minute time frame reverses the buy on the USOs, taking out the 73.11, we're about 10 cents away from that. Then the next thing you're going to look to do, then you wait to buy the first pullback on the 5, then the second pullback, which is on the 15-minute time frame, because 2 out of the 3 time frames would be in buy mode. Okay, so there it is. Great pattern on the USOs after the 15 correlated. The GLDs were nice. They just ran 30 cents. So we wait patiently. Now, tomorrow we have the FOMC final interest rate decision, obviously for 2024. I expect them to have no change, and we'll see what happens with that. And then obviously with that news, if there's a press conference or not, is going to affect the index futures, gold, the 30-year bonds, not so much oil, but mostly Bitcoin as well. We see Bitcoin today. I don't know if we could bring Bitcoin up today or not on using this application. I'm not sure if we can get Bitcoin here. Beautiful pattern. Beautiful patterns on Bitcoin. Let's see if we can bring up Bitcoin really quickly here. Okay. I want to just be able to show you this Bitcoin here. Okay. I don't know if, let's see. Okay. All right. So here's Bitcoin. I wanted to show you, can we bring up the 30 and the 60-minute time frame? Thanks. I just want to show the Bitcoin. For those of you who are trading Bitcoin futures, all right. So for those of you who are trading Bitcoin futures, all right. Okay, so here, if you look at the 60-minute time frame, this is today, you can see Bitcoin right here this morning, right here. We were trading, look at this pattern. We were trading at the 10th, right here. What's this high here? 108,000, I can't even believe I'm saying these words, 108,869. Okay, so if you look at the 30-minute and the 60-minute time frame, if you draw your horizontal line right here, the MACDs did not confirm the high, right? The MACDs did not confirm the high. So when you have a non-confirmation, I'm jumping up and down like a baboon. I'm thinking to myself, this is the biggest short in the world. You're making new highs, and the 30 and the 60-minute time frame are not confirming. So a lot of people who are trading Bitcoin futures are doing what? They're saying, boom, right? They're saying, good Lord, let's go buy some, sell some futures here, right? So when you're selling the futures on this, right, you then say to yourself, well, it's not making a new high on the 30 and the 60-minute time frame. And so what are we looking to do now? Okay, now what are we looking to do? We're looking to do what? Take advantage of the non-confirmation. Both time frames were extremely overbought on the 15 and the 30-minute time frame. And there it is. And Bitcoin dropped, boom. In an hour, Bitcoin dropped over 2,600 points. It's a Picasso. It's an absolute Picasso. So what's really important, okay? What's really important is understanding that when you're trading the markets, okay, you want to be able to be in the situation, okay, that'll allow you, okay, that will allow you to be in the best opportunity that you can have, which is understanding, okay, that when you're trading, to be able to be cognizant of the trades, to be cognizant of the calculations, and to see how you could be in a trend, which that's what Bitcoin is in, but you could be in a trend, but you can also, okay, you can also have a sell divergence in a positive trend. And that's exactly what you saw here in Bitcoin. Okay, that's exactly what you saw here in Bitcoin. Now, again, when you're trading the markets, okay, all right. Okay, when you're trading the markets, what you want to be able to recognize, and the potential in recognizing this, okay, is how, when you're trading, to see these non-confirmations. So you're making new highs, and the 30 and 60 non-confirmation, again, very, very powerful. Okay, here's the S&P futures right now. Again, I'm trading more off of the futures. I'm trading the futures markets during my live session, calling out the trade ideas. But what's really important with the trade ideas, I'm doing everything off of the underlying ETF, the spiders. And that's really, really important. Okay. That's really important to be able to look at the continuous contract and just trade off of the 30 and the 60-minute time frame. So that's really important as well. What else? Okay, so with that being said, if anybody has any questions,
we have a question.
Oh, sorry. Where? Hey, it's Kev again. Hey, Steve, how are you? I'm good, thank you. But why would you buy the 15-minute on indicator 3 is turning down? Or you can still buy, I'm talking about USO. Okay, so USO right now is getting oversold. Okay, the 15-minute time frame is getting oversold into a positive MACD. So if Billy could bring up the USOs here, you can see the 15-minute time frame. How would you buy the 15 if indicator 3? Indicator 3 is getting oversold into a positive MACD, Sev. Do you see that right there? That's important. Okay, do you see that right there? So indicator 3 is getting overbought into a positive MACD. That's why I said I'd be looking to buy the pullback. Okay, on the 5-minute time frame. So first of all, I'm not buying on the 5-minute. I'm on the 15. I'm buying off of the 5-minute time frame. Okay, I'm buying off the 5-minute. Okay. Okay. All right. So what's important to understand, okay, what's important to understand is that when you're trading, okay, it's not just, you can see how the 15 reversed, the 5-minute got deeply oversold right here, okay, and guess what? Now you're looking for the push up. You can see the 15 getting oversold into the positive MACD. Now, there's one thing I will tell you. If the 15-minute time frame, okay, if the 15-minute time frame, okay, if the 15-minute time frame got oversold, if the 15-minute time frame had a rising ADX and big selling pressure, I'm not really buying that pullback. Okay, I'm not really buying that pullback. Okay, I'm not really buying that pullback. All right. So again, there's a different condition for this, right? And the condition that I'm seeing here is not the condition that would warrant me not to want to buy that pullback. Sev, do you understand what I'm saying? I hope I answered your question. Okay. All right. I hope I answered your question. Okay. All right. All right. Okay. Okay. All right. Okay. So with that being said, if anybody has any other questions, please feel free to ask away. Again, I hold a live stream every day from 9 to 4. And for those of you who want to be able to be part of it, you could just text me at 914-500-7484. And, for me, I think what's really important is, to ask questions, be part of my live stream, and be part of something really great. And that's what I'm hoping for each and every one of you to be part of. Again, if anybody has any questions, you can please text me at 914-500-7484. What's really important, okay, what's really important is that when you're trading the markets, please be cognizant of putting your stops in place, being consistent. When you hit your goals, you take your money, and that's what you just try to take money out of the market each and every day. There goes oil. Oil just ran on that pattern, just ran 20 cents on oil. Okay. Now, what you really need to focus on also, okay, is to be able to, when you're in my live room, I have a Discord, people can ask questions, and people want to be able to be very cognizant of the trading and to be able to, just, when you're trading stocks or index futures or commodity futures or anything. Gold setting up here for another long here. Let's see if you get another push there on gold. So, okay. Now with that, I just want to say, everybody, we'll be back next Tuesday, and then obviously next week is Christmas. But I wanted to say thank you for each and every day for allowing me to be here for you every Tuesday and Thursday and Back to the Futures. I really, like I said, the most important thing is for all of you to be consistent and to be able to allow yourself the luxury and the freedom of being able to trade the markets. Learn from me. I've got over 41 years of trading experience, and that is something that really should not be dismissed. I'm your mentor. I'm here to help you. I have technology, but more so, I want you to realize that it's important that when you're trading the markets to hit your goal, stop, watch, listen, learn, and ask questions, okay? All right, everybody, you have a great day. Have a great weekend. Remember, be consistent. Actually, I'll see you Thursday. I thought today was Thursday. I'm losing my mind. I'll see you Thursday at 1:30. Remember, tomorrow, FOMC meeting, and then we'll go from there. Have a great day, everybody. God bless, and God bless the United States of America. Be well, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.